Why is Bitcoin going from high after high after high? Why does it not stop rallying? I think the obvious answer is the Bitcoin ETF, right? We got the Bitcoin ETF approval, and with that approval, we now see traditional money from the traditional markets getting into Bitcoin. That's the simple answer. But when we look in a bit more detail at this, we can actually see how Bitcoin becomes an even more stable store of value. Because before we had the inflation, right? Currently, Bitcoin inflates by roughly 1.7% per annum, and that's always selling pressure by the miners. But now with the Bitcoin ETF approval, when we look at the numbers, we see that there is roughly, relatively constantly actually, roughly 3 times the number of Bitcoin that flows into those ETFs relative to the issuance of Bitcoin. So it's 1.7% that we get issued through the mining. It's more than 5% per annum that's get bought up by the ETFs. So far since approval, right? We don't know how long this will last. We don't know how constant this will be. But so far, this line looks relatively straight, relatively smooth. So that's a good thing, right? We are basically now at a net negative. Like Bitcoin will become scarcer and scarcer over time. And that's not the only effect, actually. There are other effects that had been at play already before. And so I believe that even before the Bitcoin ETF approval, we already had a deflationary Bitcoin. The nice thing about Bitcoin is we can look at the data on chain, right? We can see what happens to every individual Bitcoin over time. And we can see what kind of Bitcoin hasn't moved in the last 10 years or in the last 5 years. And we can see what are long-term holders doing. Now for the Bitcoin that hasn't moved in the last 5 years, this might simply just be long-term investors, right? But for the Bitcoin that hasn't moved for the last 10 years, it's very likely that the majority of those Bitcoin is lost. And when you look at that chart, right, Bitcoin that hasn't moved for the last 10 years, it is a line that goes completely straight up. And it doesn't just go straight up in terms of the number of Bitcoin, it goes up even as a fraction of all of Bitcoin. So more and more Bitcoin gets lost as a fraction of all of Bitcoin. And that shrinkens the supply even further. So we've got the lost Bitcoin, we've got the Bitcoin that gets scooped up via the ETFs, where people now might be saving in their 401ks in Bitcoin. And all of that combined makes a very, very nice store of value. We do have our volatility, and the volatility is to be expected because the liquid Bitcoin relative to the Bitcoin that's floating around is relatively small, right? A lot of people simply have their Bitcoin in cold storage. So that means when only, say, 5 or 10% of Bitcoin is being sold, the price can easily go down by 50 or 60%. There's a huge leverage effect in this. But when we believe in the long-term dynamics, in the long-term tokenomics, right, when we believe that more Bitcoin is getting lost, when we believe that the ETF is going to scoop up more Bitcoin that is being issued, and when we also believe that over time, fiat currencies continue to expand at the current rate. So in the last 50 years or so, that was roughly 6.5% per annum for the US dollar. When you believe all of this, then Bitcoin is a very nice store of value and we can take nice advantage of those dips. It's always hard to buy those bottoms, right? Because everybody says Bitcoin is over, it's not going anywhere, there's now new technologies out there, so Bitcoin can't really compete. But if we actually see that the long-term holders continue to buy, when we actually see that people use this as a store of value, when we actually see that the tokenomics are fine, because supply measured in Bitcoin is shrinking, and then supply, of course, relative to the ever-expanding fiat system is shrinking even more, then this is a very solid way to store value. And it's even more solid than stocks, I would say. Because when you look at the historical performance of stocks, right, how much do stocks perform? It's maybe 8.5%, maybe 9% per annum. But that's, first of all, before fees. But secondly, also, considering that the fiat expansion is 6.5% per annum, not that much net return, right? It's only 2, maybe 2.5% in net purchasing power if we don't just take deflationary consumer goods, but actually the things that matter, right? Like education and medical costs, etc. All of those kind of things. So just as on a real return basis, when we adjust for 6.5% monetary inflation, Stocks don't do that well. Stocks do only 2 to 3%. But Bitcoin, I believe, will do much more because it already loses those 2 to 3% every year. Right? 2 to 3% gets roughly lost per year. Plus, now the ETF scoops up more and more of that issued supply. Right? There's 3 times more that's being bought up by ETFs than is being issued. And then, plus, we get probably more and more adoption of Bitcoin as it stays around for longer. Right? It's not anymore such a crazy idea to have at least parts of your portfolio in Bitcoin. And one might even go so far to say, if you don't need the money today, if you only need it in 10 or 20 years, to have even more money in Bitcoin than you have in stocks. Right? This could be totally reasonable because the long-term returns are higher. Nowadays, very few people still hold bonds. And why is that? Because bonds don't return enough. Bonds don't return more than the monetary expansion over the long term. And so you're basically destroying money if you save for retirement when you put it in bonds. And so that's why the 60-40 split that was so popular in the past has completely gone, right? 60-40 is pretty poor. Most people just simply go into stocks. And I would argue that maybe there's a new 60-40 split that people should consider, right? Because Bitcoin is so lowly correlated to the rest of the market. It's such a nice portfolio diversifier that maybe it makes sense to have 60% in stocks and 40% in Bitcoin, right? Or even the other way around. It could be a potential way to diversify and to still have the returns that are needed, not to get diluted away with all of that money printing. And on top of that, we've even got an insurance in case the absolute catastrophe happens, in case the financial system completely implodes, right? Then we could build even more on top of Bitcoin and have our purchasing power saved. It's completely independent from countries. It's completely independent from the ups and downs of the economy, at least unless we don't have complete liquidity crunch. Right? We have seen that spill over from the stock market and from the property market to the Bitcoin market during COVID. There was a huge liquidity crunch, but everything went down at that time. Even gold went down. People simply just sold everything just to get liquidity. But that's not the regular case. The regular case is that we've got very low correlation and it's a very nice portfolio diversifier. And so take this seriously, right? Don't just think you have to store your wealth in property and in stocks. I believe Bitcoin is a real alternative. And it does make sense to have more than just a little bit of play money in it. And it does make sense to also dollar cost average into it and to buy in aggressively if we are in a dip, because the volatility is amplified due to the relatively low liquidity, similar to property, by the way, as well, right? There's low liquidity, so prices fluctuate a lot. And so let's take advantage of potential fluctuations if we do see the drops. If we don't see them, it's still fine. It's just a savings vehicle. You're simply just buying in. But if we do get opportunities, then it might make sense to potentially even sell some stock and allocate that then to Bitcoin to rebalance the portfolio, so to speak. If it's the first time here, feel free to subscribe. And if you enjoyed this video, please give this a like as well. It will help the channel grow. See you next time. Cheers.